The strength of the Canadian dollar has slipped to its lowest level in 5 years. The slow decline started in late spring of 2021. At that time, it hovered around 80 cents US. Today, it sits just above 70. And since the re-election of Donald Trump earlier this month, the US dollar has gained ground on currency of almost every industrialized nation in the world. To discuss the impact a weak loonie will have on the Canadian economy, let's bring in Earl Davis in Toronto. Earl is the head of fixed income and money markets at BMO Global Asset Management. Thanks for being here.
It's a pleasure. Thank you.
So the loonie is weaker than it's been since 2015. Break down for us what accounts for this continuing slide.
Yeah, well, there's long-term effects and short-term. So since 2015, the loonie's weaker largely because productivity is lower than it is in the U.S. We've seen the other side of that coin in regards to growth. You know, the growth in the U.S. over the past 10 years compared to Canada has been higher. So what that does is when you have international investors looking at where they're going to invest in the world, they generally gravitate to a place that has higher growth because they get higher returns on their investment. So they're buying more US dollar assets than Canadian dollar assets. So that's the long-term effect of why there's been a general trend downwards.
I mean, I don't have to tell you, there's a cost of living crisis in this country. What does declining loonie mean for the average Canadian already struggling with paying their bills?
Well, there's good news and bad news about that. So, and I would say the good news outweighs the bad news. So the bad news is obviously imported inflation. So anything that we buy that has US dollars or from the US will be more expensive because we're paying Canadian dollars and that's weaker to the US. Having said that, one of the benefits of a weaker Canadian dollar is more manufacturing, because our goods and more exports to the U.S. Because our goods are now cheaper for U.S. Buyers and purchasers. The benefit of increased manufacturing because of a weaker Canadian dollar is more employment. And I would say the impact of more employment outweighs the impact of higher inflation. One other thing I'll add that I think is very important. A big driver of the recent weakness in the Canadian dollar is the monetary policy divergence. Basically, what that means is the Canadian central bank has been easing or lowering rates much more than the U.S., 50 basis points this year, and that's forecasted to continue. So because of that interest rate differential, what happens is the dollar weakens, but our mortgages are lower than they would be on the renewals. And that's an important thing to remember. Why are we weaker?
Well, is there a bottom here? What do you think that bottom is?
Well, there's two reasons why we have a weaker Canadian dollar. I've spoken to the domestic made in Canada ones. There's a made in US ones as well. And you kind of referred to this in the intro. In regards to the US election and Trump being elected, right, he has a pro-growth platform and a nationalistic platform. So one of the key things in his platform is deregulation. By deregulating, you actually increase potential growth because regulation is a friction on growth. So that means that will attract even more dollars. And the weakness that we've seen since the elections, not just against the Canadian dollars, against euro, it's against the yen, that's seen through the dollar index. So going towards next year, that will be the driver of a lower Canadian dollar. So to answer your question, where do we see it? In 2024, the range was basically 75 cents to 71 cents. We believe that range is going to be 73 cents to 68 cents in 2025.
If there is an election in this country, which I mean, there's a lot of speculation about when that will be, and there are policies that are put into place that are similar to Donald Trump's in terms of cutting regulation, could we see that impact the dollar here domestically?
Well, yes, it's possible, but one of the things that's very important to remember, it's not just the platform or the policy, it's the actual details of the platform or policy. So until you see the details of the platform or policy, it's very hard to determine what the direction on the currency would be.
So what do you think it will take for us to see a reversal in this downward trend? What will need to happen to see the loonie tick upward?
Yeah, so the biggest thing is stronger GDP and stronger growth in Canada. And that usually comes through consumer spending. We had a little bit of strength today in the Canadian dollar versus the US because of a stronger than expected retail sales. So the question is, what would impact Canadian spending? So there's one thing for sure is higher housing prices, because there's what they call a wealth effect. And when people feel more wealthier because their houses are worth more, they spend more. So that's one reason. The other reason would be actually a stronger US economy, because that's our largest trade partner. So we benefit from that: more manufacturing, more jobs, more spending. So those are the two avenues by which a made in Canada strength to the Canadian dollar could come. There's one made in US reason for a possible stronger Canadian dollar is as we find out the details of the policies and platform of the US,
right,
that will form the direction going forward.
Last question to you. I'm going to sneak two in here. I mean, if there's a lot of turmoil in the United States government, could that lower their dollar? And also, what are your predictions in the new year for the Canadian economy?
Yeah, so let's talk about the U.S. No, I believe the U.S. dollar is going to be very strong throughout 2025. And that's because the pro-growth and nationalistic policies will actually attract more investment dollars into the U.S. So despite whatever turmoil may happen in the government, the pro-growth and the attraction for capital to invest in manufacturing in the U.S. is going to be a big driver of the currency going forward. And sorry, your second question was?
Yeah, I was just going to ask you what your predictions are for the Canadian economy in the new year.
Yeah, I'm an optimist by nature, so I do predict the economy to do better than expected. And the reason why I expect that, I think the U.S. is going to do very well. And as I said before, we're the largest trade partner in the U.S., so we should definitely benefit from that. So I am optimistic on the Canadian economy going into 2025. In addition, the lag effect of all the interest rate cuts that we've seen this year, that will start really kicking in 2025 as well.
Okay, Earl, appreciate you coming on tonight. That is Earl Davis, who is the head of fixed and income money markets at BMO Global Asset Management, joining us from Toronto.